Today we will talk about Chapter 3, Double Entry Bookkeeping and Accounting to Trial Balance. First, the statement of financial position represents the starting business position of an accounting period. The bank cash book. The bank cash book is a book of original entry account for recording certain business transactions over a period of time. Double entry bookkeeping. Transactions are posted from books of original entry to the appropriate other accounts within the nominal ledger. When all of the accounts within the nominal ledger are balanced and their balance brought down, the sum of the debit balances brought down should be equal to the sum of the credit balances brought down. The nominal ledger trial balance is a financial report prepared to display this balanced position. The trial balance is used to test the accuracy of transaction bookkeeping and as a starting point for the main financial reports. Transaction posting. Each debit entry in the cash book will require a corresponding credit entry within the nominal ledger. Each credit entry in the cash book will require a corresponding debit entry within the nominal ledger. What is trial balance? A trial balance is a list of accounts and their balances at a given time. The primary purpose of a trial balance is to provide or check that debits equal credits after posting. Posting transactions. Double entry bookkeeping. Duality of transactions requires that each transaction will have entries at least two nominal ledger accounts. Double entry bookkeeping. The double entry bookkeeping principle of accounting requires that a debit entry in one account will require a corresponding credit entry or entries in another account within the nominal ledger and vice versa. Books of original entry. In the case of our exercise, all entries have been made single side only in the cash book. The cash book, therefore, is a book of original entry from where transactions are posted to other accounts in the nominal ledger, applying the bookkeeping principle of double entry. Example 3.4. The nominal ledger trial balance. Required, complete the nominal ledger trial balance of each as at 5th July. So, applying the double entry bookkeeping principle, we require that all transactions require both debit and credit entries of equal value. This will mean that if all nominal ledger accounts are balanced off and their balances carry down, the sum of all debit balances brought down will be equal to the sum of all credit balances brought down. So when we prepare the nominal ledger trial balance, we put debit side and credit side and must be equal. First, we start with revenues and then expenses, assets, liabilities, owner's equity, and finally drawings. So because the sales revenues have normal credit balance, so the sales will be put in the credit side for $1,630. And then the expenses, purchases, rent, advertising, repairs, all these expenses have normal debit balance. And then assets, which are fixed assets, inventory, receivables or debtors, cash account, all these assets have normal debit balance. And then liabilities, which are payables or creditors, bank overdraft, long-term loans. As we said before, that liabilities have normal credit balance. Then we put owner's equity, which is H capital account, and the owner's equity have normal credit balance. And then drawing, as we said before, that drawings reduce the owner's equity. So it will have normal debit balance. Then the total of debit side and the credit side must be equal.